early last year, the FOMC has significantly tightened the stance of monetary policy. Today, we took another step by raising our policy interest rate a quarter percentage point, and we are continuing to reduce our securities holdings at a brisk pace. We've covered a lot of ground, and the full effects of our tightening have yet to be felt. Looking ahead, we will continue to take a data-dependent approach in determining the extent of additional policy firming that may be appropriate.
All right, everyone. Welcome to another episode. I am Hells. We just got through with Papa Powell having a little conversation about how we needed to raise rates just a little bit more. What do we got, Maria and Kang?
What's up, guys? Lots and lots of earnings today. Do we want to go through a couple of these real quick? I've got a couple of them ready to go.
Yeah, no, let's go. It's like they're going to be coming on as we're moving through the show. So whenever you see them, just cut us and so we can be on top of it.
All right. Meta is a beat. Meta for the reporting quarter. Meta reported Q2 EPS $2.98, consensus $2.89. Q2 revenue $31.99 billion, consensus $31.06 billion. They see Q3 revenue $32 to $34.5 billion. The consensus on that was 31.18, so that is also a raise. That's a raise. And it says Meta reports DAUs, daily active users of 2.06 billion on average for June, up 5% year over year. So Meta is a beat and a raise up. I don't know how that DAU number looks. I do know after hours, Meta had a quick pop and gave most of it back. So that one will definitely be interesting.
Almost like Threads.
Yeah, basically, right? Big pop and then nothing. The next one is eBay. eBay is out. eBay was a beat. eBay reported Q2 adjusted EPS $1.03, consensus 90 cents. Q2 revenue $2.5 billion on a consensus of $2.7 billion. They reported Q2 GMV of $18.2 billion, down 2% on an as-reported basis. And they see Q3 adjusted EPS of 96 cents to $1.01, consensus 92 cents. Q3 revenue $2.46 billion to $2.52 billion on a consensus of $2.23 billion. So that is a beat and a raise for eBay. And eBay is down after hours. So a lot of these, we're going to have to go through those conference call transcripts to figure out what's going on. Let's see.
It is pretty indicative, though, Maria, isn't it? That even if we know the data point, we still can't figure out the direction.
Exactly.
It's like it continues. It's like continues to be the same. Exactly. It's like okay, Microsoft yesterday, same thing.
The next one that we have is Mattel. Mattel reported Q2 revenue of $1.09 billion. Consensus was $1 billion. So that is a beat for the reporting quarter. They reiterated full year 23 adjusted EPS view of $1.10 to $1.20 on a consensus of $1.16. So that's a straddle there. They reiterated full year net sales comparable to $5.435 billion in full year 22, consensus $5.44 billion. So in line to slightly down. And Mattel is they dropped and now it looks like they're about flat after hours. So those are like three of them I think we just went through. Let's go ahead and get some of this chat room chatter out of the way and we'll come back to ERs. How about that?
Yeah, no, sounds good. So look, we had Powell pipe off today. I'll just give my quick little summary. It's like he did come across a little bit like a putz, a little bit disingenuous. He tried to say, "Oh, well, now we don't need unemployment to rise. Now we don't need this." The one thing that he did say that he actually acknowledged that he hasn't in some of his past, that I'll give him just the smallest bit of credit, considering that I still am not a big fan of his, was the fact that he did say that there are several members that have interest rate cuts on the books for next year, which means, once again, we're closer to the end of this cycle than we are the beginning. He didn't give bears anything to really sink their teeth into. And to be honest, he really didn't give bulls a whole lot of a reason to sell. So here we are. I think that's a lot of reason why the move today was very muted. Kang, what are your thoughts?
I mean, he also said that they don't, to me, it was just a lot of the same that we've been hearing. No rate cuts this year. I found it interesting. He said that they didn't think that they were going to get down to their 2% target until 2025, which, again, I think we heard that last time. So I don't think that it's kind of like some kabuki theater, right? They don't want to signal that everything is over because they don't want to release more animal spirits on the market and have that inflation potentially get away from them, i.e. through the wealth effect and all this stuff. So they want to appear that they've got their kind of foot on the brake and that they're, still going to do something if inflation goes up. But, to me, it just seemed more or less like what we got pretty much from the last one. So a lot of a nothing burger, really.
Yeah. Maria, how about you?
With the both of you, I think it was pretty much a nothing burger. In my opinion, it was as expected. I don't really think there was, we weren't expecting any surprises and we didn't get any surprises. So that's what I think.
What I do think is funny though, is like last year, I remember Bullard, who was like on one of the networks in the morning and prior to the show, and he was talking about he thought that the terminal rate was going to go north of 5% in order for policy to become restrictive. And that morning, I can specifically remember that futures dipped on that, and we had some red on that in the morning. Because that was kind of a new concept, but it's just I just find it interesting how the market kind of changes expectations as time goes along, because now we're over, 5% and rates are at the highest that they've been in 22 years in regards to the Fed funds rate. And the market's just like,
No, I think the market could be like, because it's priced in. It's like they've told us 1,000 different ways what they were trying to do. You have inflation pulling back without damage in the economy. So it's like, that makes sense. It's like, I think the biggest fear is that this accelerated rate raise was going to destroy the economy. Thus far, it hasn't. We keep on hearing about lagging data, but at the same time, he did say today that he felt like policy was restrictive. That's something else that was a little bit new. So from the standpoint, as far as bull overall moving forward, I think at this point, the inflation conversation is over, minus a spike in inflation. And I think it really now the eyes really reflect back to earnings and see how are these companies going to report moving forward when there does appear to be pressure on margins, when everybody now is coming through saying, yeah, we're going to raise a rate here. We're going to raise our rate here. We're going to raise this. It's like from Microsoft to Netflix to you name them. They're all trying to inch up their cost to consumer just a little bit. How does this end up playing out? What can the consumer actually hold? All right. So, Maria, it's our favorite part. Well, it's my favorite part. Maybe it's your favorite part. So, maybe it's possible. It's possible. But where is the money flowing? Where?
I think we've seen some interesting movements into EV names. It looks like two that I know over the past week, last week and into this week, NIO and XPEV. Both we've seen some interesting flow through there. I don't have any positions open in either one of those. A third one that I remember just now is LI, although I haven't looked to see if they're still holding that position. But the EV names are definitely an area to keep an eye on.
Yeah, I totally. And I think that the theme is not only EV, but a lot of that green energy. There was some interesting flow, some put writing on TAN. TAN's in an interesting spot on the chart. Especially if you're looking at a weekly chart, it's down, it's basing in an area to where it could really make a move higher. And we do know that there is a lot of money that's being earmarked to flow into these sectors, over the next 5 and 10 years. So a lot of that kind of makes sense that you're going to get that move. Banks surprisingly have gotten some activity also to the upside, which has been nice to see. Was able to move out of that Bank of America play that I had. Was very happy with the results there when it finally got its move. That they decided that, you know what, Bank of America actually is a real bank. That was a cool thing.
Right.
So yeah, overall money is there, but I still think, and I think you've said it many times, and I think we can both agree, we most certainly at this point are not seeing any type of real conviction flow. You can call it the Fed, you can call it this earnings, release, but we're not seeing the money being put to work. We'd really like to see something.
I would like to see that too. And actually, if you want me to be honest, I closed out of probably about 5 positions this morning.
Yeah, I noticed. You basically made $8.7 trillion. That was pretty amazing.
Sorry, guys. I apologize for that. I started coughing
No
here.
worries. All right. So now we move on to Shag, Marry, and Kill. Kang, you're first up. What you got, buddy?
So I'm watching this on Nvidia. This is a 4 hour, pretty compressed right here. And if you take a look here at the 4 hour, we're getting very tight in the apex of this pennant right here. Very, very tight. Now, when I submitted this earlier, watching this one, again, longer time frame, may take longer to play out, but you've got resistance up there, 467.20, and then you've got support around 445.60. So not advocating for up or down, but just wanted to call attention here to this setup here because it is getting very compressed here. Again, with it being a longer time frame and with it going back a little farther, those areas of support and resistance are going to be pretty strong. So I like Nvidia, and I'm going to be watching this one for a break, either of support or resistance to get in and put on some size and time.
I like it. I'm gonna ride with you on this one. I actually would love to see a bounce off that bottom of that channel that you have there, and then potentially a move higher into ER. So I think either direction, I'm riding with you. I like it.
Woo.
Yeah. So, and it's definitely, I agree. It's definitely turned into one of those momentum takers that the market wants to run. It's like we're going to see flow pounding into that thing with some pretty outrageous strikes at the upside. Downside is a little bit more muted as far as what at least what I'm seeing and noting. But there are still some people making some pretty decent sized bets that we get more of a dramatic pullback on Nvidia. I like the company long term. It's had one hell of a run. I'd like that bounce right in there. Actually, I'd like for it to dip a little bit more, if I'm being honest, to go ahead and ride that thing. All right, now we're to me. I'm still in scalp and see mode. Scalp and see. There's not. I'm being honest when I tell you guys, there is nothing hanging out there from a flow standpoint that makes me want to put real money to work going out to next year or even 2 months out. It's like in the way that things are moving, this chop that we've kind of been in, we get these accelerated moves, and then we come back and we retrace. It's not something, this environment is not necessarily something for me, but these names that I called out, the TAN, China last week has performed very well, still good flow into that. These are going to be names that I'm watching for the move to the upside. Yeah, everybody nods their head.
Yeah, I mean, pretty much, I agree with you. Nothing wrong with scalping. Nothing wrong with scalping, especially if you're not seeing conviction on the longer time frames. Nothing wrong with that at all.
Yeah. All right.
And then my turn, huh? All right. So mine is Ally. So we actually saw last week some decent buying into the September 30 calls. And Ally is one of those names where you don't really see flow too often. And when you do see it, it does typically tend to work out. Another thing I kind of liked about this is that it was post ER flow. The daily chart looks pretty good so far. We are kind of at an area of resistance, and I'm looking for potentially an upward break of that resistance. You can kind of see that we're running into an area that could get a little bit sticky, but I'd love to see us kind of break through that. OI still looks really healthy, shows that they're still in the position. So for right now, it is a shag for me.
I think Ally could, I definitely like it in terms of, being a financial and rising rates and stuff like that. So I'll roll with you.
Yeah, I like it too. It looks like it's kind of poised at, getting up this little level. I think it could perform well. Yeah, I'm with it. Definitely with it.
Hey, Hells, I've got 4 more ERs to go through. You want to do that real quick?
Let's do it. Grip it. Let's go.
Just four. LRCX reported reported EPS of 598 on a consensus of 507. Revenue 3.21 billion, consensus 3.13 billion. That is a beat. They see September EPS. I don't know why they said September. They see EPS 605 plus or minus 75 cents on a consensus of 560. Revenue 3.4 billion plus or minus 300 million on a consensus of 3.3. So we're going to call that a straddle. Still a beat. LRCX is up slightly after hours, so that's one to keep an eye on. The next one we're going to look at is Chipotle. Chipotle is down after hours.
What?
And they came in revenue 2.5 billion on a consensus of 2.53 billion. That is a miss on revenue. Same store sales increased 7.4%. They see Q3 restaurant sales growth of low to mid single digits, in full year 23, mid to high single digits.
Wow, I had no
Mhm.
idea that the margins on government cheese have been slashed that much. It's like that's rough. It's like if they can't make the money on the queso that they're charging, we got problems, real
Right?
problem.
I agree. And then ServiceNow, they beat the reporting quarter, EPS 238, consensus 205, revenue 2.15 billion on a consensus of 2.13 billion. And then for the next quarter, they're estimating 2.185 to 2.195 billion. I do not have a consensus on them. And ServiceNow is also down after hours. The last one is Wyndham. This is not one we typically look for. And actually, I don't have their earnings out yet. So I can't go over that one. So we are done with earnings for the time being.
All right, very good. So where are we at now? We jumping into the viewer question because we really want to do a
Sure.
viewer
Oh,
question. They've been really great questions recently.
They have.
All right. So Ducky asked the question: do you use yesterday's flow to help it with your directional bias today? I'll go first on this one. I think the answer for me is absolutely, especially when it comes to weekly. If I see that there are building a concentration, like whether it be Meta or AMD or Nvidia, when they offer to Apple especially, Apple has a tendency to where if they, and I'll use the like 192.50s and the 195 calls specifically. When you see that activity in the Apple 192.50s and 195 calls, you can bet your bottom dollar that they are going to make every single effort to move the market and or move Apple in that direction. So knowing that those are on the books, a day out, 2 days out, whatever it may be, it's going to gravitate in that direction. Now, odds are if they hit it once, they're going to come back and pump it again. So you take mental note. Yes, no, they are in and they have an idea that they want these 195s. File that away. The next day, are they coming back in and re-hitting those 195s? Or are they flipping back on the bid and saying, you know what, it's not going to happen. Maybe we can jump in at a lower strike. To answer your question, absolutely, unequivocally, 100%. It is a great tool for me.
So I'll say I'm not to counter Hells. It's not a counter. My only problem is I don't like the word directional. I don't like those two words, directional bias. I like using
hmm
flow to help me determine whether or not money is moving into the market or into certain sectors. And I definitely keep it in mind as far as, okay, yes, they're bullish on these sectors or bearish on these sectors. So it's always in mind. I just don't like the words directional bias. So
hmm
aside from that, does flow help me? Absolutely, all day, every day. It helps. It helps me. I just try not to include directional bias as much as I
Yeah,
can.
yeah, I would say for me that's like a red flag too. Now, do I look at the macro? Of course. Do I think that influences the market? Yes, but that's on a much broader and longer time frame. You can still get up moves, even when you see stuff on the horizon. So, but I'm with Mario 100%. When I see the words directional bias, that's kind of throwing up some red flags for me. But yes, flow is definitely beneficial. Now, for me personally, I like to use flow to look for longer term, like swings, especially when they're putting on size. So I like stuff like that. But yes, flow is definitely helpful. But as best you can, when the bell rings in the morning, you should try not to have like a dyed in the wool opinion on what you think the market is going to do that day. Go with the flow.
Yeah, I think look. I think you both offer interesting takes, and Ducky, you have a wide range of answers there. While some I'll agree with, some I won't. I won't spend a lot of time on it, but it's like, I think it's somewhat important that you have a knowledge of where the money is pegging, um,
Agreed. Yeah.
and if it's moving in a certain direction, whether you
Pegging,
want to come
interesting
up with a
choice of
different name
words.
for it or not, it's like I'm not sure. All right, so that's it with that one. What else do we have on ERs, Maria? Anything else?
On ERs, no, I don't have Wyndham. That's it for me. That's it.
All
I
right,
don't have.
folks, we hear the music. We know what that means. Sorry, man. Sorry, man. I was going to say, hear the music. We know what that means. It is time to go, folks. That means we are wrapping up this edition of Black Box Beat. Got another one in the books. We'll see if the market has any follow-on from Powell into tomorrow. But for this week's edition, y'all have a good one out there. Please like and subscribe to our YouTube page so that you can catch us when we go live. And until next week, everybody stay green.
Bye.
See you guys.